Well, folks, we've got another multi-billion-dollar economic study on our hands. But unlike our other content this week, this one isn't precious metals. It's copper. Of course, today we're talking about the much-awaited feasibility study for McEwen Inc's Los Azules copper project in Argentina. While their ownership may be now down to 46%, this multi-generational asset still seems to have plenty of value for the gold producer. Let's dive in. Los Azules has delivered a feasibility study, and honestly, it feels a bit underwhelming relative to the preliminary economic assessment at a high level, despite MUX rallying 7% at the time of recording following the release of the study. That sense of underwhelming follows McEwen Copper, the subsidiary in which Los Azules is housed, using a copper price of $4.35 per pound for the feasibility study versus $3.75 under the preliminary economic assessment. Yet the net present value didn't move a whole heck of a lot. It went from 2.7 billion to 2.9. And that's with more forecasted production on an annual basis under the feasibility study than was expected under the PEA. Sensitivity tables released in line with the PEA for comparison suggested that at $4.31 per pound copper, which was 15% higher than the base case, the net present value would be in the area of 3.7 billion. Project breakeven, meanwhile, has moved from $2.34 per pound copper to $3.10. Yes, that's how things tend to go when moving from the PEA stage of a project to a feasibility stage. But it doesn't make it any easier for investors to digest. Costing, of course, has also exploded upwards, while expected recoveries have fallen, as has expected cash flows. And those aren't the only changes here. So let's get into it. McEwen Copper, here under the feasibility study, is proposing an open pit operation that would have a total life of mine of 21 years, which is down from the 27-year life of mine proposed under the prior PEA. The Los Azules pit is expected to be mined in 12 phases, with a total of 1 billion tons of ore and 1.7 billion tons of waste expected to be processed and mined over this life of mine. Total ore expected to be processed is down from 1.2 billion tons under the PEA, while total waste expected to be mined is up from 1.4 billion. That ore is expected to have average diluted head grades of 0.453%, which is down slightly from 0.457% under the prior study. While the expected strip ratio has risen from 1.16 to 1.65. In terms of processing, McEwen intends to use heap leaching to extract the copper, alongside a copper solvent extraction electrowinning process to produce copper cathodes. Recoveries from this method of extraction are estimated at 70.8%, which is down quite significantly from the 72.8% modeled under the PEA. This, however, is where we should also mention that McEwen is considering implementing Nuton technology. This would process the primary material stockpiled during the mining of the leach project, as well as mineral resources outside of the mineral reserve pit with low soluble copper content. Using this tech is expected to extend the life of the project by 30 years or more over that of the planned leaching operation, with that tech expected to have much higher recoveries at an estimated 85%. Average production over the life of mine here is estimated at 148,000 tons a year versus 146,000 tons a year under the PEA model, with a portion of that production front-loaded to the first 5 years of operation, when annual production is estimated at 205,000 tons per year. The PEA comparatively had modeled production of 182,000 tons per year for the first 5 years. Over the life of mine, the feasibility study suggests that 3.3 million tons, or 7.3 billion pounds, of copper will be produced. So how does all this shake out in terms of costing? Well, unsurprisingly, the PEA was more favorable in this regard, because they always are. Initial capital costs have seemingly exploded from that study conducted in 2023 through to the feasibility study released this week, rising from 2.5 billion to 3.2, a 29% increase. The big increase here is attributed to direct costs, which rose from 1.1 billion to 2.1, with the big increase attributed to mine facilities, equipment, and pre-production, which rose from 66 million to 806. Project indirect costs, meanwhile, were effectively flat at $380 million, although that doesn't include a new line item for $139 million in project management services. That increase in project management, however, was offset by owner's costs, which dropped from $467 million to $177 million. Contingencies also declined, going from $495 million under the PEA to $294 under the feasibility study. Sustaining capital costs estimates, meanwhile, declined, going from $2.2 billion under the PEA to $2.1 in the feasibility study, while closure costs rose from $180 million to $386. Altogether, the change in costing has had a material impact on the per-pound metrics. C1 cash costs over the life of mine are now estimated at $1.71 a pound, which is 60% higher than the $1.07 per pound estimate under the PEA, while all-in sustaining costs rose to $2.11 a pound, an increase of 29% from $1.64 per pound under the PEA. As for the economics, Los Azules overall is estimated to contain an after-tax net present value of $2.9 billion, alongside an IRR of 19.8% and a payback period of 3.9 years at $4.35 per pound copper. Net cumulative cash flow overall is estimated at $9.7 billion. Comparatively, the PEA had estimated an after-tax net present value of $2.7 billion, alongside an IRR of 21.2% and a payback of 3.2 years at $3.75 per pound copper, with net cumulative cash flow of $10.2 billion. The bright side here for McEwen, however, is that, well, copper is quite a bit higher than $4.35 a pound. And given the failures we've seen globally at Ivanhoe and Freeport and the guidance reductions at majors like Teck, well, copper will likely hang around a bit higher here. At the time of recording, copper is trading above $5 a pound again. For reference, at $5 per pound, Los Azules is expected to have a net present value of $4.5 billion, as well as a 25% IRR and a payback period of 3.2 years. As for next steps, well, McEwen wants to get construction started in 2026, with startup of the SXEW process in 2029 to enable first copper production by 2030. That, of course, is contingent on both permits and funding. On the permits front, an environmental impact statement for construction and operation was approved in December of 2024. And on the funding side, Los Azules has received preliminary finance proposals from European ECAs and OEMs that include Komatsu, Sandvik, and others. YPF Luz, meanwhile, has agreed to finance the cost of the power supply line in exchange for a long-term power purchase agreement, which had the effect of omitting $440 million in capital expenses from the study. So far, indicative proposals could support $1.1 billion or more in equipment and infrastructure funding, but that figure is roughly a third of total initial capital costs, so McEwen has a bit of a ways to go before they can seemingly make a construction decision. As it stands, full funding isn't expected to be received until roughly this time next year, while early works is expected to commence in Q3 of 2026, with full construction beginning in the first quarter of 2027. All right, so let's wrap it up. Things might not have been as rosy for Los Azules under the feasibility study as they were under the PEA, but most investors expected that. The trouble here is really that the funding required is higher than the net present value, and funding secured so far is roughly a third of what is required. But both of those issues are solved with a rising copper environment, which we might be in the midst of. In any case, this is such a large asset that we're certain it'll be placed into production. The big question is just how, and what that looks like for the equity investors of McEwen. All right, everybody, thanks for watching. As always, if there's stories you want us to cover, please let us know in the comments section. Also, if you enjoyed this video, do me a favor, smash that like button, subscribe, and ring that notification bell. And if you want more mining content, check out our website over at thedeepdive.ca.